so I've spent years studying hundreds of stocks, digging through earnings reports, and watching money move. And for this video, I've narrowed it down to just the 10 best stocks. We're talking growth, value, and pure opportunity. Longtime viewers will already be familiar with most of the stocks on your screen. These are the ones I come back to again and again on this channel, but only 10 of these will make it. And the first stock out of the hundreds that I track with my Mr. Invest sheet is called DUOT Technologies. This is a very safe and easy first pick, because first of all, the stock has done nothing the last year, while their fundamentals have massively improved. They are trading at a price to sales ratio of 6, which sounds expensive, but not if you are forecasting to grow your revenues 93% and your EPS 83%, which is also visible in their beautiful EPS chart and revenue chart. And this is their genius business model. DUOT builds smaller mini data centers that sit right in the community, in places like schools, hospitals, or near factories. This means the data only has to travel a few miles instead of thousands, making everything instant with no latency, which is critical for certain jobs. While big companies take years to build a traditional data center, DUOT can drop a fully functional, high-powered unit into a community in just 3 months. Right now, the biggest problem for AI is that there isn't enough electricity. Big tech companies are waiting years just to get plugged into the grid. DUOT has a partnership that gives them access to massive turbines that can generate electricity anywhere. These turbines generate enough electricity to power entire towns, and DUOT uses them to feed their hungry AI servers. Major banks like Morgan Stanley and BlackRock have been buying up millions of shares, showing that the professionals believe in this story. In March 2026, DUOT signed a massive contract with Hydrohost to deploy a GPU cluster for a leading global technology company. This single contract is expected to generate approximately $176 million in revenue over 3 years. That's $58 million in revenues every single year from just this one contract. To put that in perspective, in 2025, their total revenues were $27 million. So that's a 2x in revenues from just this one deal. And to top it off, the company expects to keep 80 cents of every dollar they make from this contract as gross profit, which is an incredibly high number in the tech world. But there must be something wrong, right? Maybe it's their balance sheet? Well, that's also not the case. In less than a year, they have raised more than $110 million, significantly strengthening their balance sheet. In my Mr. Invest sheet, you can see upside potential for stocks based on the company, their own guidance, and analyst numbers. And it's showing us that the company has the potential to surge at least a 180% over the coming 3 years. Next up on my top 10 list, I chose AST SpaceMobile. The stock is down 40% from its all-time highs back in January. But let me scare you. They are trading at a price to sales ratio of 262. That sounds ridiculous, but not if you are forecasting to grow your revenues 2000% in the next 12 months. This is beautifully visualized in this revenue chart. AST SpaceMobile is building cell towers in space. The goal is to connect normal smartphones directly to satellites. This could remove dead zones and bring mobile broadband to places where towers do not exist. It has major telecom partners like AT&T, Vodafone, Google, and others. It is also working on government and defense-related use cases. The company reported a $30 million contract award from the Space Development Agency. They are also well funded. They reported over $3.9 billion in cash and cash equivalents. The biggest risk I got to mention is execution risk. AST must build, launch, and operate many satellites successfully. Their latest launch with Blue Origin failed. It also said it aimed to reach 45 to 60 satellites in orbit by the end of 2026, with launches expected every 1 to 2 months on average. Major financial institutions are forecasting AST SpaceMobile will generate close to $5 billion in annual revenues by 2030. This is also visible in my Mr. Invest sheet. I'm forecasting the stock has the potential to be between a $200 and $280 stock 3 years from now. The stock trades now at $72, so that would be a nice return on your investment. So that is why this very special company deserves a spot on the list. Next up on my top 10 list, we got IAD Gold. What makes this stock so special is that it's a great play if you want to have a stock that will benefit from inflation, especially now with higher oil prices, and the fact that the only way to manage the US debt is by devaluing the dollar and print a whole lot of money. With this setup, gold will usually appreciate a lot. And who benefit the most from that? Gold miners. I own 2 gold mining stocks. One of them is B2 Gold, and the second one is IAD Gold. I chose for IAT Gold for on my top 10 list because it has a lot more upside. It's the best funded small cap gold miner in the world, focused entirely on Nevada, the single best place in the world to mine gold. Nevada is known for its miner-friendly laws, clear regulations, and world-class gold deposits. They control more than 250 square kilometers of gold-rich land in Nevada, a massive portfolio of projects. Their plan is to go from producing about 25,000 ounces per year today to a target of 600,000 ounces per year by the early 2030s. That's a 24 times increase in production. Franco-Nevada, one of the most respected gold royalty companies in the world, agreed to a $250 million royalty royalty financing deal to fund their Nevada development plan. When one of the smartest, most experienced companies in the gold industry writes a $250 million check to back you, that's a huge signal. They now have the money to execute their plan. No more guessing about funding. CEO Richard Young personally bought a large chunk of company shares in late March 2026, a move that sent the stock up 9% in a single day. When the CEO buys shares with his own money, it's one of the strongest signals possible. He believes the stock is going higher. The average analyst price target for AUX is $2.9. I'm forecasting the stock has the potential to hit $10 by the end of 2028, which is a 500% increase from current levels. But remember, that's only if they execute. But before we move on, smash that like button if this is helpful, and subscribe only if you want more stock research and updates. The next spot on the list was reserved for a fintech stock. I had to make a choice between SoFi and Nu, both right now offering an insane buying opportunity, but I actually ended up choosing Nu. Probably a controversial take right now, but there were two reasons for this. The first reason is because Nu has more upside potential according to my Mr. Invest sheet for the coming 3 to 5 years. And the second reason is basically valuations and growth rates. Nu is growing their revenues 55% instead of the 30% of SoFi, and it's trading at a PE ratio of 23 compared to SoFi's 36 PE. And furthermore, they are forecasting that their earnings per share will increase by 65%. And all this is visible in their beautiful EPS chart and the fabulous revenue chart. Nu is basically a digital bank, which is eating up market share in every single country in Latin America, and very soon also in the United States. They are successfully doing this by capturing over 130 million customers across Brazil, Mexico, and Colombia. In its primary market of Brazil, the company serves 62% of the adult population, making it the largest private financial institution that goes far beyond credit cards. Its ecosystem now includes high-yield savings, personal loans, insurance, stock trading, and crypto services, ensuring that as customers grow their wealth, they stay within the NU ecosystem. The company operates with a structural cost advantage that traditional banks cannot replicate. The average monthly cost to serve an active customer remains below 80 cents. While Brazil is a mature market for NU, Mexico and Colombia represent massive growth engines. Nu already reaches 15% of the Mexican adult population and is the leading issuer of new credit cards there. The company is backed by world-class investors, including Warren Buffett's Berkshire Hathaway, which recognize the company's deep moat and strong cash flow, which tells you that retailers are not the only one noticing that about this company. Next on the list, we got the stock T1 Energy. The stock is up 300% the last year, but for a good reason. What will surprise you is that even after this move, the stock trades at a price to sales ratio of 1.5, which is extremely cheap if you are forecasting to grow your revenues 70%, but their earnings per share will decline by 25% because they are still ramping up production. They are one of the leading solar manufacturing companies in the United States. The company has Section 45X production tax credits. Think of it as the government paying T1 for every solar panel they make. With tariffs on Chinese solar panels rising, T1 is one of the very few companies that can supply American-made panels at scale. The demand is not slowing down. AI data centers, electric vehicles, and factories all need massive amounts of electricity. All 5 analysts covering T1 Energy recommend buying the stock with an average price target of $8.90. And in my Mr. Invest sheet, I'm forecasting that the stock has the potential to hit $30, which is a 450% increase from recent prices. Next up in my top 10 list, we got the stock Resolve AI. This is another stock that has done nothing the last year, while everything improved. Analysts are extremely bullish on this stock, and there is a reason for this. The company went from making $5 million last quarter and $40 million this quarter, to now projecting to make $140 million 3 months from now. Their AI agents autonomously search, negotiate, and transact, and they own their own LLM, which is called Brain Power. It is designed for zero hallucination and 100% data security, which is the only way big brands will trust AI to handle their sales. Resolve doesn't have to find every customer itself. Google and Microsoft are reselling Resolve's Brain Suite to their global enterprise clients, creating a massive low-cost sales funnel. World-class investors like BlackRock and Citadel have recently built large stakes in the company, signaling that professional smart money sees the massive valuation gap compared to other AI companies. Resolve AI is right now trading at a price to sales ratio of 8, which is not expensive, especially if you're growing your revenues with these growth rates for the coming years. But with a PE ratio between 50 and 70, which is quite high, the company will surge between 80% and 150% within 3 years based on PE ratios, which is not that impressive. But if you look at the price to sales ratios, with 120 million shares outstanding and revenues hitting 800 million in 2028, then you can clearly see that the stock could 10x within 3 years based on a price to sales ratio of 5. This next stock is truly a hidden gem, and it's called NexGen Energy. Energy. This is an uranium mining stock. I own 2 uranium miners. The other one is Encore Energy. This was a pretty difficult choice for me, but I ended up choosing NexGen Energy for the following couple of reasons. In March 2026, the company received its final major federal license from the Canadian government, which is basically the starting gun for construction. The regulatory risk that used to hang over this stock is now gone. And the absolute best thing about this company is that the company's uranium deposit is 100 times richer than the global average. The rocks at their deposit are so strong and dry, and that is allowing them not to use expensive freezing techniques like their competitors. This makes it the highest quality and lowest cost mine of its kind in the world. NexGen can produce a pound of uranium for about $10. In today's market, that same pound sells for $90 or more. The profit margins are incredible. The company isn't locking itself into cheap old prices. They have designed their contracts to rise along with the market, ensuring that if uranium prices keep going up, the stock price has the fuel to follow. If we take a look at the stock chart, it definitely looks scary. The last year it's up 130%, while the company isn't generating any revenues. But if we take a look a little bit more into the future, they're expecting to make their first revenues in 2027, and they're expected to make $1.7 billion in 2028. A PE ratio between 40 and 60 is definitely possible. That means that the stock could surge between 500 and 700% within the coming 3 years. But that's obviously only if production and construction goes as planned. Next, we got one of the more exciting data center stocks out there, and it's called Gorilla Technologies. First of all, just take a quick look at their forecasted revenue chart. It's up and to the right, forecasting a 42% revenue increase in the coming 12 months, while only trading at a price to sales ratio of 3.7. That's what you call a steal deal. Gorilla Technology builds AI-powered solutions for security, smart cities, and data centers. They make cameras that think, roads that monitor themselves, and buildings that run smarter. The recent deal announced April 29th was massive news. Gorilla Technology has expanded its AI infrastructure collaboration with DUOT Data Services with a project value of approximately $2.8 billion US. But there is more. Gorilla secured a massive $1.4 billion AI data center project in Southeast Asia, which is expected to contribute $100 million in revenue every single year from 2026 all the way to 2028. To put that in perspective, last year their total revenues were $100 million. That means this contract alone will provide that in revenues for the coming 3 years. Management's operational target is to deploy up to 100 megawatts of AI infrastructure by the end of 2026. That is an enormous scale up. They are actively expanding across Singapore, Malaysia, Thailand, India, and Indonesia. Every country in the world will need the capacity for AI. And if you want to own a data center stock that operates outside of the US and Europe, then Gorilla Technologies is the perfect pick. The company had $121.4 million in total cash, and total debt declined by roughly 30% from the prior year. Northland Capital raised its price target on GRRR to $40, saying the company's large AI data center deployments are quickly gaining visibility and calling the pipeline a tidal wave of interest in AI data centers internationally. Now that we got elevated oil prices, oil and gas stocks are having the time of their life. But unfortunately, most of these stocks already made massive moves. The next stock is still undiscovered and still has to make its move up, and it's called Prairie Operating. This is an independent oil and gas company. Last year, Prop's revenue skyrocketed from under $8 million to over $240 million. For 2026, the company has plans for approximately 40 new wells. Management has set a bold target to nearly double their net income this year. When a company tells the market exactly how much more profit they expect to make, it shows a high level of confidence in their current assets. The company's oil and gas assets are worth over 10 times what the entire company is priced at on the stock market. Another bullish signal is that recently insiders bought over $4 million worth of stocks. This is showing high confidence in the valuation disconnect. Prop recently moved to the Nasdaq, which is like moving from the minor leagues to the majors. This puts the stock on the radar of big institutional investors and index funds. The forward PE ratio is just 2.16 times. Most oil and gas companies trade at 8 to 12 times. This is deeply cheap. The price to sales ratio is just 0.25. For investors with patience and a stomach for small cap risks, this could be one of the most undervalued energy plays on the entire Nasdaq. Next up on my top 10 list, we got Bitdeer Technologies. You guys might recognize this stock from this video, where I dedicated an entire video to just one stock, which I don't do often. The stock back then was trading at $7. Right now, the stock is trading at around $13. That's almost a 2x from when I published that video. And guess what? It's still a buy. This is another stock that didn't move at all last year. But at the same time, look at this. Their revenues are forecasted to surge 160% in the coming 12 months, while they are trading at a price to sales ratio of 7.6, which is pretty cheap if you are growing that fast. They're becoming a major player in high performance computing. They're building their their own data centers and they're transitioning their Bitcoin mining centers to AI compute. Apart from that, they're right now the king of Bitcoin mining because they're right now mining Bitcoin with the highest hash rate. That basically means that they're the most efficient in mining Bitcoin. And the reason they are so efficient is because they're designing and manufacturing their own chips and hardware, which are a lot more efficient compared to other Bitcoin mining chips that other companies use. But this was costing them years of research and development. But now in the coming years, this will all start to pay off and they will be able to start selling these chips to other Bitcoin miners. Apart from this, they have 3000 megawatts of power, which is equal to 3 gigawatts. And in the coming years, you will have a lot of power constraints. So having a lot of power capacity right now is worth a ton. And if you compare BTDR's power capacity to similar companies in this industry, you will be able to see that they have the same amount of energy capacity as Nebius, one of the big players in the space. And you will see that they have more capacity than Wolf, CleanSpark, Bitfarm, all those companies that are very much talked about, but nobody is talking about Bitdeer technologies. Here you see the world map of all the data centers, and here you see a complete overview of every single data center site they got. You can see all the sites that are online and converting to AI, and which sites are work in progress. So as you can see over here, they got 4 sites that are converting from Bitcoin mining to AI compute, and they're all planned for Q4 2026. And there are 3 more sites that are planning to be opened in 2026, but all of them are dedicated for Bitcoin mining. But the question is, what will that mean for the stock price in 2026? What will likely happen is that management will announce in Q3 or maybe even earlier that these data centers are coming online and with a potential hyperscaler contract. And after that, Wall Street will re-rate this stock, and that means this stock could jump 60, 70, 80% in less than a month. And let's not forget, their biggest AI data center site will be coming online in 2027. So these ridiculous growth rates are not just for 2026, but also for 2027. In my Excel sheet, I'm looking 3 to 5 years into the future, and according to analysts and the company their own guidance, I'm projecting that they will grow their revenues 40% in 2027 and 31% in 2028. And with an EPS of $1.8 and a PE ratio between 25 and 40, which is definitely reasonable, that shows us that this company can surge between 460% and basically 800% within 3 years. So just keep that in mind. It's always important to do your projections further out. Now, if you look at their total power capacity of 3 gigawatts, you will have to split that in 1.7 gigawatts of online capacity and 1.3 gigawatts in development pipeline. Another important note is that the new chips that they're producing won't be sold to the other Bitcoin miners for the first 6 months. So right now, the revenues of selling their chips is non-existent because they need to use and install them in their own data centers. But once they finish doing that, you will see additional revenue coming from selling the Seal miner chip. And here you see the Bitcoin mining hash rates for the biggest Bitcoin miners, and BTDR has the highest one of them all. Close second is Mara Holdings, but after that, companies in their space are really lacking. And that shows that BTDR can sell their chips to their lacking peers, which is another massive tailwind for this company. Alright, so we now know why this company is so attractive right now, but now I will tell you all the risks you need to know to make a well-informed investment decision. There are 3 negative points to pay attention to. The first negative point is a lawsuit that is issued by a company named Heavy Plate Solutions and is regarding BTDR's plan for their 570 megawatt data center expansion in Clarington. They state that BTDR's construction violates the company's 30-year lease by disrupting shared utilities and rail access. This site is critical for BTDR because this would be their new flagship that is planned to be fully dedicated to AI workloads. But the lawsuit forced the company to change the status of this project to be updated. Now, if you watched until this point, make sure to smash that like button and subscribe if you want to see more videos of mine. And don't forget to join the Discord where I will give you a heads up every single day. And we have a great community. So I will talk to you guys over there.